Welcome to our market update for January. In this video, we'll talk about what happened in the markets during a month that saw both all-time highs and some ups and downs. Even though there were news stories about tensions involving Venezuela and Greenland, along with updates about the Federal Reserve, the Fed, which is America's central bank, both stocks and bonds went up for the month. The S&P 500, which tracks 500 large U.S. companies, rose 1.4% and briefly went above 7,000 for the first time ever. International markets did even better, with developed countries up 5.2% and emerging markets up 8.8% when measured in dollars. Meanwhile, gold and silver prices fell after going up significantly, which we'll explain more about soon. For people investing for the long term, January is a good reminder that while news headlines can cause markets to move in unexpected ways, what really matters most are the basics of investing and sticking to your long-term plan. Let's begin with what caused the ups and downs over the past month. Early in January, a U.S. operation in Venezuela captured Nicolas Maduro. While this was focused on drug-related terrorism, much of the discussion quickly turned to oil, because Venezuela has the world's largest known oil reserves. Worries increased further when the U.S. made statements about potentially purchasing Greenland. This also raised the possibility of tariffs, which are fees on imported goods, against countries that are part of NATO, a military alliance. Luckily, both of these international concerns calmed down quickly, which allowed markets to bounce back. Past experience shows that while international events may create short-term uncertainty, their impact on markets and the economy is often less significant than initially feared. This chart shows that many different types of investments have done well so far this year, including stocks from the different parts of the world. Now let's discuss what happened with precious metals, gold and silver, and the dollar. Gold and silver had big swings in January. Gold went up to nearly $5,600 during trading hours, while silver went above $120 per ounce before both dropped sharply on the last day of the month. These moves were driven by what's called the debasement trade, which is the idea that government spending and central bank policies that make the dollar worth less may make precious metals worth more. Uncertainty about the Fed, including whether a new Fed leader might lower interest rates, pushed these metals higher. However, on January 30th, President Trump announced his plan to nominate Kevin Warsh as the next Fed chair once Jerome Powell's term ends in mid-May. This changed expectations about how leadership at the Fed would transition, which led to a drop in both gold and silver prices. This sudden reversal shows how quickly markets can change based on what people expect from policy decisions. It highlights why precious metals should be seen as just one piece of a larger, more diverse investment mix. Finally, it's worth noting that company earnings, the profits that companies make, have been strong, which supports both the stock market and investment portfolios. According to FactSet, a financial data company, 75% of S&P 500 companies that have reported their fourth quarter results did better than expected. If these patterns continue, large publicly traded companies could see their earnings grow by nearly 12% for the quarter. Many investors are paying attention to technology and artificial intelligence earnings because these stocks have been a big part of the market gains. At the same time, many other industries have also benefited from broad economic growth and have seen their earnings grow as fast rates too. For people investing for the long term, the main message is encouraging. Company profits remain strong across many industries, which supports stock prices. This fundamental strength is one reason why major market measures stayed positive despite the ups and downs in January. We hope you found this information helpful. If you would like to learn more about any of these topics, please don't hesitate to reach out. As always, please hit the like button and subscribe. Thank you very much.